locked up bets.
Country of a billion opportunities.
This is there with the import alert on its Tikaldana plant. Remember, it's the second plant that's got the import alert. Volumes as well very high on the stock, in fact, of about almost 38 lakh shares already in the first 2 hours of trade. And Evron as well is down by about 5.5%. You've got Prakash Industries as well as GOL Offshore. Those two names as well down by 4%. What's gaining, however, agrochemicals major BASF, that's at a level of about 617. Up by almost 5%. Phenolics Industries and Sujana Tars as well, which is of course a single-digit stock. Those are gaining gaining with quite a bit of momentum. Okay, let's keep the ball rolling. Lots of trading ideas coming your way. Hemain Kapadia as well as Ankit Chaudhary now join in on the show. And Hemain, it's 2 buys and a solitary sell recommendation. Looks like you're veering toward the auto pack.
Yes, I think Avan, what is happening is there's an obvious negative bias on the market, but because of the FNO rollover and expiries, I think the markets are volatile with a negative bias, but I think irrational movements keep on coming in. Keeping that in mind, I have a buy on Tata Motors. One can buy Tata Motors around 394. It's a stop loss of 391, target of 400. Stock is in a intraday and a short-term uptrend. We need to close above 400 for a big upside to come in, but there's a short-term call. Secondly, I have a buy call on Exide. Exide is deeply oversold. We've been down for a long time, multiple weeks. Positive divergences, stock seems to be stabilizing. So buy in Exide around 11211. Stop loss of 109, target of 118. Lastly, a sell on Tata Chem. Tata Chemical is looking overbought. There's a small distribution which has happened. Stock is in an intraday downtrend. So a sell in Tata Chemicals at around 278 with a stop loss of 281 and a target of 272.
Okay, 2 Tata Group stocks and an Exide that's on Hemain's list right now. And Ankit, tell us about what stocks are you recommending to our viewers?
Yeah, good morning, Megha. The first stock for the day is PTC. I would recommend buy with a stop loss of 57 and target of 66. The stock has been consolidating between 55 and 60 since the start of this month. This has resulted in the formation of ascending triangle pattern on daily chart. Yesterday, the stock closed above this upper end of the ascending triangle. If the stock manages to sustain above 60, it can head to 65 to 66 in immediate short term. My second stock pick for the day is Rallis India. One can buy with the stop loss of 165 and target of 185. The stock has been largely range bound between 150 and 170 since last 2 months. Yesterday's price action shows strong momentum with very good volumes, which is conducive for a upside rally that has a potential to test its 2011 high of 185. My third stock pick for the day is a buy on BHEL with a stop loss of 140 and target of 165. After bouncing back from its 8-year low, the stock has been moving in a well-defined channel since last 2 months. Yesterday, the stock gave a breakout by closing above its upper end of the channel. Now a sustained close above 145, 146 is required, which can push the stock to its 200-day exponential moving average, which is placed at 165. The stop loss for this trade can be kept at 140.
Okay, thanks very much, Ankit, for giving us your top trading recommendations. Let equities take a back seat. Let's focus on what's happening in the commodities universe. Looking a bit
mid downside of this commodity. So yes, again, I'm seller in crude.
And of course, if you've got any questions, email us at bnsn@etnow.